Alukrishna, we have to start recording as well.
Yes, I remember that today.
Perfect. So I'm
Okay,
stopping my video and I'll put myself on mute now. 2 minutes to broadcast now.
all right. Thank you.
Alukrishna, we have to start recording as well.
Yes, I remember that today.
I'm
Okay,
stopping my video and I'll put myself on mute now. 2 minutes to broadcast now.
all right. Thank you. How come the thing is coming back? Okay, we'll go live now. I'll just. How come the thing is coming back? Okay, we'll go live now. I'll just. Okay. Okay, we'll go live now. I'll just. Some technology issue, I think. Hello, good afternoon. Welcome, everybody, to today's panel discussion on COVID-19 Path to Recovery, a CEO Perspective. This is an initiative that is presented by PWC India. Thank you all for joining here today as we still wait for people to come in through our attendee list. Hello, good afternoon. Can you all hear the repeat things?
Yes, there is an echo. The repeat is coming back.
The initiative that is presented by PWC India. Thank you all for joining here today. Let me still wait for people to come in through our attendee. Let me just rejoin. Can you all hear the repeat? Okay, I think there was some technical glitch which we have addressed. So yeah, we are all back here. Thanks a lot for joining us here today. We have a fantastic discussion lined up on the path to recovery. We all want to know how we are going to recover, especially businesses, from this COVID pandemic that is creating so much havoc around us. My name is Alokesh Bhattacharya. I'm senior editor of the Economic Times, and I am going to moderate today's discussion. We have a very distinguished panel here today. Let me take you through a quick round of introductions. We have Shamal Mukherjee, chairman of PwC India. We have Patanjali Keswani, popularly known as Patu Keswani. He is the chairman and managing director of Lemon Tree Hotels. We have Ram Praveen Swaminathan, the MD and CEO of Mahindra Logistics. We have Piyush Patnaik, the MD of Cargill India. And we have Arjun Mohan, the CEO India of Upgrad. Very, very phenomenal lineup. We also have with us Sanjeev Krishan, is the partner and leader deals of PwC India. He will present to us slices from a recent survey that PwC has done. And we also have with us Sanjay Tolia, the markets leader of PwC India, who will deliver the vote of thanks at the end. In addition, we have with us Sudha Natarajan, who is the director of BCCL. Welcome everybody to this panel discussion. Time permitting, we will also take questions from the audience towards the end. To the audience, I would request that if you have questions, please put them in the Q&A tab that you can see at the bottom. Do not try to use the chat function because you will not be able to. just put your questions in the Q&A, and all the panelists can see, and as and when we get time, we will quickly pick up on those questions that you have. So just a small context before I move on. Yesterday I was seeing some traffic signals in which it was written, "Stay home, stay safe." And it just brought home to me the fact that this "stay safe, stay home" it's probably become one of the most used phrases in recent times. It's everywhere. We use it in our emails. Anytime we write an email to somebody, say "stay home, stay safe," on our phone calls, traffic signals. And it's something that has really come home to stay with us, because with the number of people infected and being killed by this virus, rising every day, staying at home and safe is probably, the best way out. But the fact also is that even if you stay home, you need to survive. You need the essential commodities, right? You need your vegetables, you need your food, you need other things. And so companies that produce them and companies that carry them around and distribute them, their business has to keep moving. They have to keep working, otherwise you'll not get what you need. Education has to continue. Education cannot stop. And therefore, online classes have become so popular. Traveling on work or leisure is probably just ruled out for now. And hotels, many hotels are doubling up as, COVID care hospitals. And they're just trying to lend their facilities for the greater good, which is a great thing. But we have to look at the recovery path and see, how do we get there? Of course, if all of you are well versed with business, and if you're going to look at the economic forecasts of the globe and India, it's, you're going to go into depression. So if you look at the World Bank, or whether it's World Bank or OECD or IMF, the numbers for global GDP contraction, they range from 5% to 12%, depending on which report you're reading, and depending on whether the virus is going to make a second wave come back and how long it's going to persist. So this is likely to be, regardless, the deepest global recession in decades, despite governments world over providing a lot of fiscal support, monetary policy support. Despite that, this situation is there. And governments also, to provide that support, they also need money, and the government revenue is also drying up. So there is a huge rise in the share of public debt to GDP, which is also a major concern, right? But if you still look at that, in India, there are some green shoots that are visible. And happily, we have panelists here who belong to some of those green shoot areas also. So we'll be having a positive discussion. While GST collections for July were slightly lower than in June, but the freight loading in July was higher than last July. And the exports in July were 87% of last year. E-way bills that were generated in July were higher than in June this year. So it shows that demand is there. It's not that demand is not there. The demand is there, but the conditions are not there. And so when this demand can be unlocked, it's anybody's guess, right? The best way to do a guesswork or an educated thing and do a better job of it is to do a survey, right? When you go and do a survey and talk to people who know the situation on the ground, and you get it done, because those insights then tell you what is the likely way that this industry is going to tackle this situation. So for that, I would now request Sanjeev Krishan of PWC to present some of the insights of the PWC survey to us. The survey is titled Value Conservation to Value Creation. Sanjeev, over to you.
Thanks, Alokesh, and good afternoon, everyone. Let me just put up a few slides. So, I'll start talking about the survey in just about a minute. But just if we were to look back, even before COVID hit us, the world had been changing quite significantly. If you look at the world, even on a pre-COVID basis, there was a lot of asymmetry which was setting in the world. There was a lot of disruption that the world was experiencing. There was a lot of volatility which the world was experiencing as well. There was, in part, a lot of populism and nationalism which was setting in with some very strong nationalist leaders across the globe. And also, we could see that there was significant trust deficit building across the ecosystem. And the organizations really needed to adapt to sort of, in some ways, challenge all the challenges that themselves were facing. Now, what this required really was for the organizations to adapt, and then COVID hit us. It sort of only magnified the problem that organizations across the globe were facing. So to understand how businesses in India in particular were experiencing COVID, how they were sort of going about it, what were the priorities as Unlock 1.0 set in, how they were going to go about it, and what to them would be success post-COVID. We, as Alokesh mentioned, we decided to do a survey. So we ran a survey across 225 CXOs, and this is what the survey findings really tell us. First up, some positive news. The good thing really from the survey is that 82% of the respondents felt that they would potentially get back to the pre-COVID run rates by June of 2021. This was possibly the most heartening news coming out of the survey. Having said that, it is almost 73% of the respondents believe that they will turn over lesser in FY21 than they did in FY20. Again, if you look at it, there are two good things which are coming out of the survey findings. One, only 15% of the 73% believe that they will continue to suffer in FY22. But more importantly, there are at least 27% of the respondents who believe that they will do better in FY21 than they did in FY20. And even more importantly, 60% of these people actually felt that they had actually set in robust crisis management, and that is the reason that they will be able to survive this COVID crisis that we are facing at this point in time. Obviously, there are certain very obvious reasons which were established: the collapse in demand, the supply side disruptions, and of course the liquidity constraints. These really came out as some of the key factors which is actually leading to a disruption across businesses. Now, if you look at a sectoral cut of how the respondents went, no surprises here, but you would see that sectors like industrials, infrastructure and real estate, and logistics in particular have been the most hurt, and possibly the ramp up is going to be the slowest. In particular, on the industrial side, we noticed that almost 95% of the respondents believe that FY21 is going to be worse than FY20 was. And even though on the logistics side, and of course we'll get to hear from Ram in a bit, the ramp up has already started. It is going to be on the slow side as the supply side disruptions continue to bother India Inc. There are obviously some good news again. The retail and consumer sector, which of course suffered a lot in the first 2 months, seems to be coming back reasonably quickly. And then there are sectors like IT and particularly healthcare and pharma, which seems to be on the upswing as well. And they actually are actually the major contributors to the 82% that we alluded to a little while back. Now, while this is their assessment, let's move forward to how are they looking at the priorities post the lockdown, and how are they looking at the business environment. Again, if you look at it, what are the key priorities for them? One is, of course, the rebound in demand, the cost optimization, liquidity at 44%, and continuity and supply chain. Now, most of these manifest in the way they are looking at the business in the near future. A lot of people that we spoke to on the sidelines of the survey told us that the business, there is going to be significant competition which will be there, and price sensitivity is something that they are very, very concerned about. A lot of them actually told us about how urban demand is falling, and while the rural demand is going up, the price points in the rural markets being such that the enhancement in rural demand is not going to make up for the shortfall in the urban demand. And with consumers not wanting to spend but conserve their cash, there is going to be significant challenges at the price points at which sales are going to get made. This in the context where there is already slowing demand, and from a business standpoint, they ought to be focused on looking at ways and means of enhancing their demand, or at least making sure that they don't lose market share, and also cost optimization. Funding obviously is one of the other issues. Clearly, at this point in time, we are in the moratorium period, and while most of the organizations seem to be benefiting from it, quite a few of them actually said that they are actually continuing to pay their banks. The real answer will really come when the moratorium lifts, however. Interestingly, only 34% of the respondents said that regulations will come in the way of the tougher, will come in their way in the near future. This is very interesting because when we spoke to a bunch of clients in the past, they've been mentioning some amount of skepticism with some of the stuff which has happened, particularly in terms of the giveaways, if I may, which the government had some time back. But the good news again is that there is significant optimism as people are looking forward. Now let's look at what are the ways and means by which some of these challenges are going to be navigated. I think if I look at the four things first, and I'll come to the 77% part later. I think there are three or four things which are almost equally important from the respondent standpoint. I think one of the big issues really has been the whole thing about greater domestic manufacturing and sourcing. This has been spoken about a lot, but very interestingly, only 38% of the people really said, and primarily in the industrials and the pharmaceutical side, that they really want to focus on it. One of the key things which are coming out is that while labor costs in India is cheaper, the infrastructure and logistics costs continues to be on the higher side. And in some ways, while people are cautious and optimistic about moving their sourcing to India, it is not going to be in droves. That's a key message that's coming out. If you look at the logistics and distribution models, I think that's another one. People want to focus on multimodal. People want to get data analytics in the way they drive efficiency in their logistics. And this is, again, a key factor for them. Very interestingly, 37% of the respondents also believe that they need to actually collaborate and partner to augment capabilities. They also tell us that they want to conserve cash and actually be able to outsource a lot more rather than spend their cash building capacity inside. So this should be good news for outsourcers in particular. And again, 31% believe that they need to come up with adjacent products to make sure that they are satisfying customer needs, because customer needs are also changing and their wants are also changing. But you look at it, and the 77% and the 70% of the respondents tell us that accelerating digital enablement of their businesses is going to be their key priority. Now, this is a message which is coming out loud and clear, and this is a message which is coming across sectors, across businesses of all shapes and sizes. Whether it is industrial automation, whether it is robotics, people are saying that they need to focus on digital enablement, and it is about really efficiency and speed of decision making that they want to use digital means and ways. I think this is something which appears almost irreversible at this point in time as businesses set themselves to take on the post-COVID challenge. In terms of how businesses are looking at their at the opportunities for growth, I'm a deals person, couldn't have got this survey done without talking about how people will transact or not. But honestly, 45% of the respondents actually tell us that they will be evaluating some kind of acquisitions. Quite a few of them actually believe that there will be a lot of businesses in stress, which will be acquisition opportunities for them. But there are many others who believe that there will be strategic assets, whether it is in terms of markets, whether it is in terms of products, or indeed in terms of distribution modes that they currently do not have, which will cause them to acquire businesses at this point in time. Another 20% respondents felt that they would be looking at their capital portfolio and looking to divest some of the non-performing businesses to make sure that their focus on the core businesses remains and the core business is not capital starved. Interestingly, 26% of the businesses also tell us that they will be looking at significant fundraising in the near term. So what does this all mean from a business standpoint? This is how we look at the respondents' message for us clearly. We are clearly at this point in time in the journey from repair to reconfigure, currently in the rethink phase, where businesses are looking to make sure that they at least come back to the value that they had on a pre-COVID basis. And then, of course, there are going to be a bunch of strategic, operational, and financial initiatives, which hopefully will create value for them in the reconfigure space, which hopefully, in some cases, it has started already, but in most cases, it will possibly start towards the end of the year or early next year, which will hopefully help them to increase value. And that's the value creation space that we are talking about. At the outset, we spoke about what success would look like for the respondents. And that is one of the last questions that we asked them. This is what the respondents are telling us. The key message really from the respondents is that we will not let a crisis go waste. If you look at it, 34% of the respondents are telling us that they want to learn from this crisis. They want to make sure that they make their organizations a lot more resilient to any future shocks. Very interestingly, and you will look at the almost 31%, the 19%, the 12%, where businesses are saying that they think of this as an opportunity to, in fact, gain or increase market share. And some of them also believe that this is an opportunity for them to indeed enhance reputation. Now, some of these are actually going to be for on account of non-financial parameters. And then, of course, there are these others who actually are focused on making sure that they break even cash flows, or indeed they make sure that they do not lose market share and indeed at least protect the market share in the near future. So those are the key findings really from the survey that we had. Clearly the success factors, the learnings from the survey are quite obvious, that we need to be focusing on capital conservation. We need to be focusing on digital enablement of our businesses. We need to be looking at multiple ways of doing things. We need to be agile and need to be able to do multiple other products if the need arises. And clearly, and most importantly, we are not going to let this opportunity go waste. On that note, I will pass it back to you, Alokesh.
You can stop sharing the screen, Sanjeev.
Sure.
Thank you very much. Some very interesting thoughts and quite a few positive things. Trust business people to find positive even in the most negative situation. But I suppose every situation does allow us to look at both sides of the coin and see how we can make the most of it. Where is Ram gone now? Okay, he's there. So my first question was going to come to him. So in fact, very interestingly, one question has already come from the audience who wants to know, when do you feel we will get back to pre-COVID economic situation? I wish we knew that, right? I think that is one question that even the survey will not be able to answer at this point. But thank you for the question. There's another question that has come, but we'll take it later. But, largely now that for some 5 months have gone by since the lockdown began in India, and businesses have adjusted, they have faced the shocks, they've come out of it. Some are still struggling, some are have adapted to it very well. For your industries, for your companies, we'd like to know, what is the situation currently? What are the processes that you put in place to recover from the pandemic? Like Ram, we were just talking about the risk management framework that Mahindra Logistics has in place. Has there been a change in that? But that is more long-term, I guess. So maybe you could tell us, this question will be to all the panelists. So I'll come to all of you. And just want to know, what's the situation now in your company, and what are the things you have done, to recover from this crisis? Ram, we'll start with you.
Sure. All right. So, so I think I won't talk much about April and May. Probably echo what everyone else has gone through. It was a bit of a wash, but June was a very strong recovery. So we had improvements month on month, and I think for us at least at a firm level, we ended the quarter pretty much at a 70-75% run rate across most parts of our business, both in transportation, warehousing, other value-added services. So I think we generally did have a good ramp back. And that's a momentum which we think we are holding on in July as well. Different end markets obviously are playing differently, but what we've tried to do internally, I think, and I'll try and use Sanjeev's phrases because I think those are similar to what we use. But in the repair phase, I think a lot of the focus was really on safety and communities. That's core to our values and our approach, and of course liquidity. So we did a huge repivot of the business on cash, and was quite successful for us. I think since then, real focus has been on working closely with customers. So that's a big focus for us. We've been working with customers, trying to develop more custom solutions and try to make this transition from resource to productivity, which is a big transition which we are trying to make. We've obviously been investing on digitally enabling our business in multiple ways, and that's something which we've really been focusing on. And a lot of focus actually has been on service innovation. So rather than just assume that the world will remain the way it was pre-COVID, we've actually tried to move towards flexible pricing models, output-based systems, establish more flexible, revenue structures with customers. So there's just a lot of work we've done on service differentiation. On our mobility business, we've moved towards subscription services. So we've just reinvented a lot of our service lines in some ways during this period. And very honestly, I think a lot of the tailwinds we're seeing since mid-June are actually around those new service lines, right? They're obviously focused on markets, but that's been, I think that's the scheme of the things which we've done. Some work really on holding the ship and defending the core, but also kind of expanding by launching new services, investing in digital. And it's kind of been a good run rate. It's not, I'm also very optimistic about the multiplier from rural India. And of course, it plays out differently to different markets. But I think the farm and ag sectors have been strong. And we see even on the e-com companies which we work with, a lot more fulfillment and demand growth actually in tier 2 cities, smaller towns. So we're actually quite optimistically speaking for ourselves, some of the leverage that could provide us in the short term.
So there's a question for you, Ram, from the audience, from somebody who's asking, when are we going to see Mahindra Logistics back in full swing?
We're working on it.
You're working on it. All right. Very good. So I'll come to Patu Keswani with the same question. And hotels, of course, we know that hotels and the hospitality industry generally, not just hotels, in particular has been, very strongly hit because of the lockdown coming with the pandemic. So maybe you could tell us what measures you've put in place, how you planning to recover from this, and what is your growth path going forward?
So I'd like to actually talk about first this COVID and recovery. So see, one has to have a view for a certain period of time. As CEOs, all of us need to understand, or at least try to understand what is happening. So I'm a bit of a history buff, so I'm going to go a little back in time very quickly. See, epidemics only become pandemics when there is very large movements and mobility, which is why a normal epidemic, which should have been an epidemic, became a pandemic. Okay, so let me go back. The world has always had epidemics. I mean, even the Old Testament talks about, a plague of locusts, for example, which led to presumably disease over time. The earliest known plague or epidemic was in Justinian's time, 1700 years ago. The four large ones were the bubonic plague, or what was called the Black Death in around 1350. It killed half of Europe. Yep. The last three, the Spanish flu we've all heard of, killed 3% of the world, about 50 million people. 10 million people died in India 100 years ago. Okay, this was during the World War, World War I. Then we had, I think 40 years later, the Asian flu, which killed 1 million people, and then the Hong Kong flu, another 10 years later, which killed 2 million people. Broadly, what I'm trying to say is there are periodic outbreaks of disease, and they lead to behavioral change. But in every single case, people reverted to norm within 3 years. So in fact, in the Spanish flu, there were 3 spikes. Okay, it killed 50 million people, as I said. Everybody used social distancing, masks, hygiene, etc. 3 years later, all consumption trends, in fact, in some cases, bounced up. So here's my view. My view is there are 3 very interesting things that have happened with COVID. Number one is that this is an era of global communication, instant global communication. So everybody is aware of it, and everybody is enormously afraid of A, getting infected because it is so infectious, and B, the perceived high mortality rate. Okay, actually mortality rate, even the Yale Medical School made a study, is sub 0.5%, because the denominator, which you should look at, is the actual number of infected people rather than the known infected. So there are certain statistical models that tell you that actual death rate is number one. Number two, so one is instant fear, but will work in reverse when there is good news. Number two, this is the first time in history that every government and every major pharma company and lab have focused on a vaccine. Short term, we'll find therapeutic cures to the disease, which means mortality will reduce close to 0, which means you will get infected, but you will not die. That, in my opinion, will revive a lot of domestic consumption in India and movement, because fear will go. A vaccine, well, there are multiple contenders. Vaccine will come. When vaccine comes, we don't know the long-term side effects, because normally you have to see after inoculation for the next 10 years what happens. But my guess is a lot of people will get vaccinated by the end of next year. So at that point, I think things will kind of resume into the levels we are talking about. So what has happened in hotels? When you look at all this instant communication, instant fear, no clarity on when will this infection rate, what will it reach? So I suspect that in India, we will cross 1 lakh known infection cases every day by the end of this month. Okay, it will double by the end of this month. And then we will presumably plateau somewhere in Q2, and then there will be some reduction, there will be more recoveries than new infections, there will be some cure. So how do I look at it from the hotel sector? Is very simple. We are an extremely discretionary sector, as you all know, in consumption terms. The hotel sector has been demolished by this. So let me give you a number. 70% of branded hotel rooms in India were shut in Q1. Shut. So when you shut a business down, especially hotels, people go, people are not paid salaries, they go back to their hometowns, so on and so forth. So to revive it is a very, very, very difficult thing. And I noticed in the presentation by PWC, by Sanjay, that manpower availability is an issue for about 1/4 of the respondents. I think it will be a big issue. So Q1, demand dropped to 10%. So if you look at the number of rooms that were consumed by branded hotels in Q3, say last year, it dropped to 10% in Q1. Price dropped by 40%. So revenue effectively dropped sub 10%. Now, hotels are highly capital intensive, long gestation projects. They're generally leveraged to at least 1:1 debt equity, have 70% fixed costs. So the real challenge is that how do you survive in the very short term by cutting your costs? And all we did actually as a company was we said we will lay off nobody. That's the first principle, because and number two, we want to keep as many hotels open as possible. So we have about 8,000 rooms, about 15% of the mid-market in India. And we kept over 70% of them open. We made sure, the key costs that you have to control in an environment like this are basically only three. One is payroll. Number two are the other fixed costs, which is basically your fixed charges on electricity and government fees. And third is your debt. So we we have very high operating leverage. Our business is an appreciating asset called a hotel. Once the capital is deployed, then the flow through of what is called operating leverage or contribution after your fixed cost. Your contribution over your variable cost is 95%. So if that collapses, all you have to do is make sure that when your revenue collapses 80%, you must drop your expenses appropriately to cash break-even, excluding interest. With that, raise a sufficient buffer of capital. I find it amusing, actually, that capital markets talk about equity markets that you should have enough liquidity reserves. Well, in normal times, if you keep a liquidity reserve, they say you are wasting money, shareholder money, you're not getting a return. And then the instant there is a crisis, they say, why don't you have it? So, one has to navigate so many expectations in this modern age, in this time of, the world, that, liquidity, we have created a sufficient buffer. Assuming Q1 conditions, we can continue and survive for about 10 quarters. So here's my view. 3 years from now, everything will come back to normal. Hotels will recover. My guess is hotels will start recovering from next year, but real recovery will be 2 years out, because there will be initially some change. There will be demand destruction. My bigger concern, folks, is the disruption in the supply chain to the Indian economy. So here's my view. What is going to happen is that any large industry, any industry has multiple suppliers who have multiple smaller suppliers. So it goes from a large company has a mid-sized supplier who has a small MSME as a supplier, and so on. Large swathes of these will get destroyed. So when demand comes back, here's my theory, supply will be massively impaired. I mean, you take a car. A car has 300 auto component suppliers. Those guys might be having 600 small 10 crore companies, 10 crore turnover companies who supply to them. These guys are completely starved of liquidity. There are no orders. Nobody is supporting them. I mean, the government has made some attempts, but we all know the government always does too little, too late in India. So what's going to happen to our economy? I'm not so worried about, I know hotels are destroyed. You have to take whatever steps you have to, but as an Indian, I worry more about permanent impairment in supply. It'll also happen in the hotel space, by the way, because a lot of hotels will shut down because they will have no business and no support. You're on mute, Alokesh.
I'm just taking a deep breath after that.
3 years, we'll all be back to normal. You got to navigate 3 years.
That's really scary. I remember speaking to JB Singh of Interglobe Hotels, and at the time it was early, it was probably end March or April, and he was saying that even if the crisis gets over, the day the crisis completely gets over, it will take another 90 days for the hotel industry to even start thinking of a recovery.
Well, JB is a dear friend, but I don't agree. I think that it will be a very gradual increase in demand because of fear till everybody is inoculated and the fear is over. So as we are really front end of consumption, this will be true for multiplexes, for retail.
Yeah, it will be true, no doubt. In fact, like I was saying, and you have painted the picture so very accurately. And thank you for being so candid about it. But we have to face what we have to face. And it's really a bad situation. But for companies like Upgrad, it's slightly better, a lot better, if I may say so. And Arjun has a very broad smile. And Arjun, maybe you can tell us, I can't ask you how this thing has impacted you because it has not impacted you. Like it has like really given you a kick upstairs, so to say.
I mean, I was expecting that you will come to me after Pato Keswani because you will expect that after such a commentary you should go to
thoda positivity hona chahiye.
Yeah,
so tell us what's happening.
Sorry. Yeah. Last caveat before Arjun. This is the worst case. And I think as CEOs, you have to only plan for the worst case because everything is upside.
Absolutely. Totally. Yeah. See, edtech, whatsoever it is, because of the state we are in, has been in the forefront, has been in a lot of press in last few months. So what's happening really is that large number of people, take the entire K-12, the working population who is predominantly, the working professional who is predominantly our target audience, have been sitting at home for last 5 months. There is a substantial amount of uncertainty, both in the parents' kids' mind, as to what will happen in future. This has resulted in a lot of them trying out what online education is. And I repeat, trying out what online education is. So they have been a lot of people, the fence sitters who never took online education seriously, now has been forced to do it. So the observation which we had was that April, March, and May, there was a substantial growth in the traffic of people trying out online education. And this is true across, right from early learning to K-12 to test prep, especially government examinations, because these guys take break and are waiting for those UPSC examination, to the professional learning segment. There was almost a 5x to 6x growth. And at that time, you also know investor interest is still very, very high. Everyone was like saying that this is the moment. I personally would say that this is a big opportunity for us. There's absolutely no doubt about it. But if I look at the number of people who finally ended up converting, paying money, and at a revenue upside, that I won't say it's at a 5x, 6x growth. So what I'm seeing is that a lot of these people, or a big number of these people, require serious amount of convincing to actually take it up and pay out the kind of ticket size which is associated with online education across. I'm talking about the full edtech space. So what has happened is that there has been two groups of people now in edtech itself. One group of people who had the infrastructure to run that conversion. When I'm talking about infrastructure, I'm talking about the sales, marketing, the people who can reach out to the customers, pitch to them, explain to them, give the services, had the product which when given to customer on a sampling basis finally converted. So those are the category of people who have been actually able to convert. A good number of these people who are trying into paid customers. While another group of people large number of people who were just trying to get that traffic, the conversion has not been great. So I would say that net it has been a movement which has helped online education, because there has been no other options as such. But I would take it, I would say that it's the right time. We should be ready with what is going to happen in future. There is good amount of uncertainty with our TG also. I saw a sort of a uneven, as Padu was also saying, sort of an uneven rebounding coming up. In April, there was a huge number of people. It took us substantially more amount of time to close a sales cycle in April and May. Again, in June, with positivity, it started improving. In July, again, there was a lowdown. So fundamentally, it's been a market of a company or an organization or a team which has the metal to it. So if you ask,
it has still added to your revenue kitty quite a bit.
Yes,
despite
there is substantial growth, absolutely no doubt about it. Last quarter to quarter growth, if I look at it, it's more than 100%.
Yeah.
From Q4 to Q1 itself, there is a substantial growth. So there's absolutely no doubt about it. But I would say that this has been more about an outcome of a lot of steps. So for instance, I joined the company on 1st of April. And the company had the agility to let a top management person join online and never come to office so far in last 5 months. The entire organization which was doing online education has become an online organization. We decided to leave off our offices. We have canceled the lease of all, out of the 7 offices, we had 8 offices, we have canceled the lease of 6 offices. We have only 2 offices now. We have declared work from home till December. We have clear-cut SOP for every possible role on how to do it. And we have been executing very, very hard. So the way I would, and we have been one of those companies who did not pull back on marketing investment, although a lot of others did it. So I would say that this is a time where you need to be ready for the worst and hope for the best. There's no other options here. And it's just about keep observing what is happening. Like there's no point even looking what was your data last year or even last quarter. It's about what happened yesterday or what happened today morning. So all those things have been, the systems for all those things have been incredible amount of changes the company went through. So that agility is what I think is the only thing which is going to help us through. So I'm an optimist. I'm an optimist, and I would hope that things will come back in next few quarters. But yes, history tells us a different picture. But history also talks about, it never talks about a pandemic like this, right? Every time it was an epidemic. This is a pandemic. So hopefully when more number of people want the change to happen quicker, let's hope that there is a V-shape or U-shape recovery.
Yeah, let's hope that we have a V-shaped recovery. And like Patu was saying, many more people were killed in the previous epidemics and pandemics than this time. We tend to sometimes lose track of that perspective a little. The number of people killed in the last 100 years ago, it was absolutely unbelievable, the number of people that were killed. And remember that the global population at the time was far lower than what it is today. Absolutely. Right. So I think we can pat ourselves a little bit, for having done a slightly better job. I'll come to Piyush. Cargill, of course, is one of the world's largest food companies. And in India also, you tend to play a little bit of a backseat, but you have a great business going here. And so Piyush, you tell us a little bit about how Cargill has dealt with this issue here in India. And maybe you can give us some global perspective also.
Yes, certainly, Lucas. Thank you. Listening to Sanjeev and now Arjun, one thing that I'm comfortable with is that nobody will accuse me of irrational exuberance now, which I'm sure in my own circles I've been doing and hearing back from a lot of people that I'm, overtly optimistic. So that's good to start with those notes. I think I will, when this started, I think our immediate thoughts were obviously with people safety, which is at the top of line in terms of our own values globally. For our own team, the communities that we work in. But we immediately had one more priority, which Cargill globally plays a very big role, and we also play the similarly large role in India, which is to make sure that our food supply chain doesn't break. And that to us was absolutely critical in our role. And we made sure that we connect customers, retailers, consumers, and wherever possible, the industrial chains and farmers a big way. And this is exactly what we have done in other parts of the world also, to make sure that in many categories and many food commodities, we have a fairly large role to play as a company which connects different parts of the world, from the origins to the consumption points. We made sure we do that. In India, in particular, in the categories that we play in, we made sure that our factories run. We deliver in various ways to the retail points, and wherever possible with disintermediation also to the consumption points. So that we continue. Obviously, over the last 4 months, the definition of essential has evolved and is fast evolving.
Definition of discretionary has also changed.
Absolutely. And it's true, because indulgence in various forms is now becoming part of essential, even when we are homebound. So I think the focus on what is now getting redefined as essentials continues for us in the business. And as is coming out very clearly in the PWC survey, everybody is doubling down on technology. And whether the technology in terms of how we run factories, how we connect to the retail points, how we touch consumers, I think all of that is happening. In fact, I was happy to hear Arjun saying that he joined in our company also. One of our senior leaders joined online and hasn't been to office from the day she has joined office. So for the last 4 months, so it's fantastic. We are all adapting. We are all adapting really, really fast. Couple of things which are definitely happening is that demand, particularly for baseline consumption, is slowly coming back. May was better than April, and June has been better than May, and July, as we see, has turned out to be better than June. So it's clear that there is latent consumption demand at the ground, and how do we service it? How do we make sure that all of that is happening in a synchronous way without breaking the overall supply chain is something really, really critical. And a lot of enablers will work in that. And for our industry in particular, and consumer products industry, I think there is significant amount of recovery in terms of baseline consumption that we are seeing. For consumer staples, for sure. For non-consumer staples also, there is a lot of recovery in the baseline consumption. We are seeing across for our customers also. So the way we are handling it, doubling down on technology, making sure that the people's safety remains at the core of what we do, and of course, focus on essentials and make sure that we are preserving what is stronger in our core, and play our big role as a connector in the food supply chain across various ag commodities that we play the role. Back to you.
Okay, thank you. Patu, did you want to say something? I got the feeling that you wanted to interview. No, okay, my mistake.
No, I'm reading the comments actually.
Okay, there are some questions for you over there. I'll come to you with those questions at some point. Shamalda, now, Shamalda, you had PWC in India, and PWC itself is a massive organization in India. There are so many parts to it. It's a very complex operation. And something like COVID certainly does not help when all your leaders are grounded and they're not able to rack up the loyalty points on the airlines, right? Because all the travel has stopped. But do tell us, how you have handled this situation at PWC, and what is the way to growth for you?
Thank you. I think if I were to say, it's an interesting time just from a learning point of view. This is the time where you end up learning hugely. And this is the time that we are actually taking that opportunity to say that how do I reorient myself? How do I do business? How do I reorient my people? How do I look at clients' challenges that they're facing? So there's a great opportunity in that sense. Yes, it's a challenging time. So I think when we first went into this, obviously the first couple of weeks went into trying to find out that is this going to be a longer period or a shorter period. But once you realize that this isn't going to be new normal, a couple of things that we quickly took into say. One is we have 15,000 people, and we are a people organization. That's all that we have. Is the employability and safety is number one priority. I think we quickly, and that was in everything that we do. And we have people it's not a complex business, but it is obviously people with diverse backgrounds. I think people coming in from colleges, grad colleges, management schools, engineers, accountants, and therefore there is a whole lot of people who come in at every point of time. Is that how do we keep them safe? How do we keep them motivated? And how do we think about their employability? Because as people are building their careers with us, we owe it to them in many ways. That the fact is that, and let's do everything that we can keep them in at work. That was number one. And therefore, the things around health, things around wellness, things around well-being, things around connectivity. I think our biggest challenge is how do we continue connecting with people outside the work? We very good. I mean, when in normal circumstances we will get engaged with people on work and do it, but when people are sitting on their own, and we have a lot many people today who were on their own in big cities, caught in this pandemic, couldn't move around, and we had that as a thing. How do we reach out? And so you create this ecosystem where you keep on communicating and engaging with people. The second part of that was that we had been investing in technology, not now, but for the last many years. So we could easily, and we moved into work from home at least 2 weeks before the whole lockdown came in, because our infrastructure allowed us to do that. So 15,000 people on an average, we would have two instruments per person. That means 30 to 40,000 devices should actually be able to, your infrastructure should be able to handle it. And once that was up and running in no time, and that helped people to understand that they are connected, they can deliver work, and that gave them that confidence. So that in many ways, we looked at infrastructure investment was not just because of delivering work, but it allowed people to remain connected very well. So that's the second part of it. The other one is around people. This is a time where the trust, you need to build up trust of a very different type. And therefore, it is incumbent on all of our leaders is that how do we build trust with our people? And the trust gets built up when you have open communication, when you make them inclusive in the whole journey that you're doing. And therefore, from whether it's from my end or the business leaders' point of from their end, there was constant communication with our people so that you are able to tell them where we are, you are able to share with them the challenges, the opportunities that you actually have, and the learning that we're getting through it. Somewhere we also realized that when you're working from home, you're almost 24/7, and people have this feeling that if you're at home, you should be working, and there's a 24/7. So some amount of discipline around the teams that, guys, this is office time. You have to respect people's personal times. Give them off. Stop working after a certain period of time, and therefore, and then we 24th of July last, we actually announced let's have a pens down day so that people could really take off and be on their own, even though they might be at home. But that's what it is. The other one is our position is very clear. We have opened all our offices. The offices are there to be used like a business center. That if you really need something as a support, we will reach out to you. If your laptop counts down, our ecosystem allows people to be reached out, the hardware gets replaced. But if you, for some reason, need to come in the office, that is the limited period that you can come in, otherwise work from home. If you have to go to client side, senior leaders get into that discussion with our client that do you really need people on site? Can we actually deliver from home? So that's the first round on that. And if it is required, then go out and only in exceptional circumstances, go and meet the client. So clearly that was the number one on the people side. The second one, as our survey would say, you have to get your balance sheet right, because at the end of the day, you will live another day if you have the liquidity and you have the cash. And therefore there was a huge focus on your working capital management. It's not about are you making money or not, are you getting the right amount of cash to run your business in, what do you do? And a huge, as we advise clients on cost containment. The first assignment I gave out to my specialist team is take us as PWC as your client in these times and do your cost containment exercise on ourselves. So it is the same thing as Arjun was saying, that whether we look at the real estate, whether we look at the other infrastructure cost, we haven't given up space yet, but our position here is that we should reduce at least 20 to 25% of real estate costs as we go along. This is not because of cost only, because we clearly see going forward the way the work-life balance will change is that people will continue to work from home. We do not believe that, and that may not be also good for our business, that 100% work from home would happen in a very long time. Yes, we think that till next year, like till September of next year, we might have 50 or 60% of the people back in office. But clearly, you would have situations where people will start working in shifts, people will start working on alternate days, people will start working on, and that is because, not because of pandemic, not because of health reasons, but because it just becomes more efficient. It just gives back time to people. And the other thing is, we've been trying all this years, is about this flexibility in working life. And we were always been struggling. And you know why it is? We all leaders believe that we need to see someone working. And when you see someone working, means see someone working across your table. And that, what I see is the big learning that we've actually seen is the increase in the trust. We are all trusting everyone. We are trusting our supplier. We are trusting our customer. We are trusting our people. We are trusting everyone that we touch, because now the only way you can actually do your business is going online and doing technology without that physical touch. So that trust has come back. And that is the other thing that we want to preserve this going forward. That surely there's a great learning that today we bring in the trust in our workplace, and including dealings with your customers and other stakeholders. So that's on the people side. On the client side, I think what we've seen is we've also, there are complex assignments that continues to get delivered. There are people wanting to raise money. There are people who get disinvesting. There, as Sanjeev was saying, the M&A transactions happening may not be at the same pace at which Sanjeev would have loved it, but all those things have now to be delivered in a very different form. And the clients are also accepting the delivery. And that's the other learning that you actually, and there's a change in many behaviors that will happen, including when you actually talk to the regulators, when you talk to others, everyone is accepting a different way of delivery. Things that is really on top of our agenda as we look into our business is, we see our technology consulting and all around our digital really working, in that sense that that's something that we're working with businesses who are progressive businesses, those that looking at the phase of reconfigure. But good businesses are looking at how do you reconfigure our businesses, how do you make it more digitally enabled, take advantage of digital, because clearly we see business models will change and has changed, and that will remain. New business models will emerge regardless of the fact what happens to pandemic, where it goes. So I'll stop here.
Correct.
But that's an interest, in many ways is a great learning curve as a leader.
Yes.
As
new business models will certainly emerge, and I'll come back to part 2 on that, because when we talk about revenues and all, the hotel industry, of course, like you all have already pointed out, is going through a very bad time. For somebody like Lemon Tree Hotels, and for you yourself, we started with one hotel in 2004, and you are past 60 hotels now, if I'm not mistaken. 80. That's phenomenal. I think at 2019 you were at around 55, so now you're at 80, which is like huge growth. So that growth and the business model that you have used so far, and from the revenue point of view also, you have to keep your business running. There will still be people, your employees, who will come into work, and you have a lot of specially abled people who work in your organization, right? You have a policy for that. You encourage and hire a lot of
1,000 people.
You have 1,000 people, and you can't just let them go because there's no revenue. So I wonder, what you are doing and what is the new paradigm for your business, given the impact of this COVID. And optimization of costs and all is one thing, but are you looking at your business in a different way? And there's a question that came, you must have seen it, about how are Airbnb and others going to handle this, who are competing with you and the other hotel chains. Is there a new way of thinking about the hospitality industry?
So let's start with the cost side. See, about 70% of our costs are fixed. So typically, if you look at us, say, in a normal month, if we do, say, 100 rupees of revenue, our costs are about 70 rupees, of which 50 are fixed, broadly.
Okay.
So the first point is that if you do worst case scenario planning, which we did, we said suppose revenue drops by 60% or 80% in the worst case, which is by the way where it went. What do you do with three conditions? One is what will be your liquidity requirement, which is of course a strategic decision, and how do you plan for that? How long do you need this liquidity to cover your costs to be a going concern, which we tackled separately by raising capital. The second is that at 20% of your normal revenue and with very gradual incremental improvements over the next 2.5 years, how do you variabilize your fixed costs? So basically, let me tell you, I'll give you an example. A large element of our costs are people. We have 8,000 people in our company. And when we reviewed it, we found that 42% of our wage bill was with 800 people who were the managers, the leaders. So we had two options. One is we tell half of them, that you go and leave without pay. So when I put this forward, I said, listen, the plan is let's share the pain. So I gave them an option and they voluntarily said, we will take a 50% pay cut. And the senior leaders who constitute actually a very large part of our payroll, though they're only 100 in number, said we'll take a 66% pay cut. I took a 100% pay cut and that dropped that 42 to 20. Then the other 7,200 employees, some went on leave without pay because they asked for it. It was nothing forced. So that, which was another 45 came down to about 35, 37. And in between the other expenses in payroll, 15 we brought down to 2. So effectively we brought our fixed costs, payroll costs down by 50% without laying off anybody. That was the first thing. Power and fuel, which is another large cost in our business because we have, I don't know, we must be having 10, 12 million square feet of hotel space. That we brought down by 57%. Okay, we looked at every single thing. Well, heat exchange, much greater manual / automated control over air. I'll give you an example. We raised the air conditioning temperature in our hotels from 20 degrees to 23 degrees.
Okay.
That saved 20 crores, by the way. Yeah.
Wow. Okay.
Okay. So pumps, pressure of water. I mean, I can go on and on. You don't want me to get there. So we looked at every single expense and everything discretionary we cancelled / deferred. So we spent 35, 40 crores a year renovating our hotels. We said we won't renovate it this year. So to broadly put it in perspective, we managed to bring our costs down by 2/3. So that 70 came down to 20. Our revenue came down to 20, therefore we broke even. The only thing then was that how much debt do we have? Now the tragedy is in our business is that actually we had a very low debt equity till 2 years ago. Then things started improving and nobody planned obviously for COVID. So we really went to 1:1 debt equity, which means our debt went up to about 1,600 crores last year. With a lot of new hotels we opened. You alluded to it saying from 55 you went to 80 hotels.
55 in 2019, yeah.
Yeah, so about 2,000 crores of capital work in progress was operationalized in the last 18 months. So fortunately for us, we believe in a very simple philosophy, which is a hotel is an appreciating asset. Any debt I take should be ballooned. So 80% of this debt has to be paid still 6 years later, actually 9 years later. So our repayment is little. Our interest costs are at about 9%. So we've funded ourselves that assuming worst case scenario, which is the Q1 of this year, if this continues for 8 quarters, which means a very marginal EBITDA, then we need X amount of money, which is what we have got liquid in our company.
Okay.
That's it. It's very simple. But my broader view is that digital, we are working extensively on contactless stuff. So we are looking at digital for employees, for the organization, and digital for customers, and also at some level, digital, if you please, for vendors. Okay, but that's what we are looking at. And the second critical thing which we have said we will do is we will pay all our MSME vendors on time. Earlier, we would take 2 months, 3 months peacefully. Now I have requested my finance team to pay them within 30 days because, this is referring back to our earlier thing. I know of course, we still screw up on it off and on, but what I have told them is we must keep cash flowing to people who have a very little liquidity. Okay.
Would expect that from you.
Like Shamal said, no, I liked what Shamal said. You have to build trust with three stakeholders, most importantly. Actually, four. One is your employees first, your customers second, that you are doing everything right to ensure that they are safe, with your vendors, because they, if you kill them, then you have no business, and then with society and government. So, I read some questions, a bunch of questions came to me as to, do you have quarantine hotels? Yes, we've tied up with Apollo and what's it called, Medanta. We have I think 4 or 5 hotels which are COVID asymptomatic patient care centers. And everything, there is no contact. It's managed by the hotel and us, and we have every employee of ours is in PPE. And we have a hospital level set of procedures to ensure no infection. 2,000 of our employees are staying in our hotels today to deliver service and to make sure they are not victims of community transmission, which is what I think is happening in India now. Yeah. We've also got about 1,100 guests staying with us who are isolation/quarantine. Again, our employees don't interact with them. It's all contact free. We have digitized menus. We've digitized check-in. So actually, it's becoming a very interesting exercise for us, though here I'm going to be iconoclast and say, people are going to, you see, I don't agree with Shamal in one point, Shamal, which is, I have 300 people in my corporate office. I have shut it and I've said, I'm not opening it also. You work from home, right? We are only interested in delivery as leaders, but they are saying they want to meet each other. You see, the culture of collaboration and camaraderie is missing now because it's so remote. This is one dimensional what we are doing. So I'm going to open the corporate office. I suspect that you're going to need it for your social needs.
No, but I agree with that point. Absolutely. And that's a great point that you make. Again, this is to people on the line. Just for people, this social part of it, we all grew. And we are today, somewhere we are actually consuming that social capital that we had over these years by building it up, not through just going through a structured LNE calendar, learning, but through contact, by watching people like Pattu do business. Next generations of leaders will get born. And if I only see Pattu on the television screen or on the computers, I don't think so we will deliver the next generation of leaders. So I think that would be one I wanted to have your views and others, that what is that side that we would miss, and which I clearly, in our knowledge business, I clearly think that's a big challenge, that the next generation of people coming through, including people like us, we're all consuming what we had. How will we replenish?
So I'll give you an example to answer that. I was talking to 2 friends of mine who run 2 large restaurant chains. Okay, one guy Hari and one guy Ravi. Okay, they run the Domino's and KFC business. And of course, they were bemoaning the fact that there are only curbside takeaways or home deliveries. But I said, when I talk to my colleagues, they're saying, when can we meet each other? Of course, there is fear, and it's our job to ensure they don't meet. I'm not going to open any office, because if one guy, poor chap, is asymptomatic and gives it to 10 others, it is our responsibility. So broadly, what I feel is that in 3 years, just like what happened in the other 3 epidemics/pandemics, we will meet each other. We are social creatures. Okay. Yeah. Working from home is not an option. It's just devastating psychologically and socially. So, what you got to do is plan the worst, etc. I'm happy to hear that Piyush and, Ram Praveen and Arjun are so bullish. That's great news, because they are my customers, like you are, by the way, too. But my job in my business is to say 3 years later we'll be fine, but the next 3 years is so much demand destruction for us as a business, for our industry. And we need to just survive that. Everything else is upside after that. And in the meantime, you want your employees charged. So I'm mulling over, how do I get them to be social, yet be safe?
Absolutely. In fact, towards the beginning of this conversation, I had mentioned that, we used to do these events on the ground, and that's a different feeling, because you all come together and meet and greet, and, the social part of it is entirely missing. But just to come back on this to Piyush and Ram, on the supply chain issue, because both of you, Ram is a very active participant in the supply chain delivery system, and Piyush, you are a huge user of supply chain. So you would have a multi-tiered supply chain, right? There will be so many layers in your supply chain. You will have different sources of sourcing, so to speak. So have you really looked at what are the supply chain challenges? How are you addressing the supply chain now that there are regional lockdowns also, which are creating more trouble? There is a weekend lockdown in my place in Ghaziabad, right, in UP, and there is some other lockdown in some other place. So there is no uniformity in anything. What does that do to your sourcing plans, to your inventory planning, to your partners who are in your supply chain network? How are you handling these situations? And the same question to Ram in terms of how you are handling that.
Just a moment, Alokesh, to actually add to Alokesh's question, which is more here and immediate. I want also to throw open what are the opportunities you see going forth for supply chain management, because are there going to be fresh new logistics centers that you are going to look at? Because real estate is so stressed. Office space, as I said, who's given up 6 offices, shut down his offices. So there's going to be real estate availability, which is going to increase. So will that get converted into Arjun? Yeah, will that get converted into warehousing and logistics centers? So, there are also opportunities for you to completely maybe change your model or look at, where is your next leap going to be? So I would like you to add that also to what Alokesh asked.
Super. Piyush, all yours.
Yeah, thank you. I think this is the single biggest challenge, if I may say, from our point of view, from the consumer products point of view also. Honestly, on one hand, you have to conserve cash, so you play lean because you can't really be sitting on a pile of inventory and block cash. That's critical. And the second hand, it obviously all of this, what you would call as unplanned outages. Our supply chain is a mix of imported and local, so it makes it more complex because we source from practically all parts of the world, from South America to the Black Sea.
And the entire world is caught up in this.
So it's
a more complex challenge for you.
Yeah, and one fine day you wake up and you realize that that the berthing time of a vessel at the port has gone up from 24 hours to 6 days. Because there is procedures which have been added to the way you actually berth a vessel and get stuff in. So various of these things are happening, and we are doing a few. There is no perfect answer at this stage, to be honest. What we are doing at this stage is obviously we are bringing in as much as possible the part of the supply chain that we can do to the domestic shore. So that's one thing that we're definitely doing. We are also tying up with multiple sources of supply rather than relying on a single source to make sure that we have some amount of backup or duplications in terms of servicing the demand. The second piece, I think, which is to answer that question, I think the piece which is coming out as a real nice opportunity is the way you create flexibility and agility in the supply chain. Because gone are those times when we could think of what's the plan for the 90 days, what's the plan for the next 12 months, and what's the plan for 24 months. Here is what plans are changing practically every week. Cities are getting closed, procedures are getting changed. There is obviously the impact of pandemic in areas where we are operating, both in terms of asset, in our markets. So we are essentially responding to it almost on an everyday basis. Each day is a new day and each day is a new plan. So the core of this is going to be agility and flexibility. So elements of flexibility in manufacturing, elements of flexibility in the way we operate our overall portfolio, the product basket, and super agility by employing technology and some of the logistic solutions that we can use today to make sure that we are servicing demand whenever and wherever there is possibility. So that to us is the core of how we are responding to the supply chain, both at a domestic level and also to a large extent even in our global supply chains, because we recognize that you can't plan everything today in terms of where the demand spurts are going to come up. So the ability to really have disaggregated sourcing, and at the same time to make sure that if the business continuity practices in sourcing, which is that if you have one spot going down, then do you have a backup which can come up in the next 3 hours or 12 hours or 24 hours? I think those are elements that we are really, really working on, both in our domestic supply chain and also in our global supply chain. I think those to me are the core things of how we are responding as a food company and an ag company globally.
Okay, fantastic. Ram, Mahindra Logistics is a major player in this whole supply chain business, right? I mean, your revenues have been growing phenomenally the last few years, some 3,500 crores, if I'm not mistaken. Maybe there was possibly a small bump in the last fiscal. I don't know how in 1920, but that was a very slight one. But the business seems to be doing very well. But what I'd like to ask is, as a major player in this supply chain, where you have to still meet delivery schedules and things, how do you manage, especially when the sources of demand might be in sensitive areas, which might be contaminated areas, right? Red zones and stuff. How do you manage to be fast enough to dynamically alter your plans, as and when demand arises from areas, or when you are going through an area that is troublesome? So is it easy to do? You have a digital dashboard, a huge India map in front of you. How do you do it?
So I think first
and
of
also
all,
the revenue part also, I'd like to ask you in terms of the revenue, what's your outlook?
Yes, obviously, I think we've been in a challenging environment now for 18 months. Obviously, not the COVID way because of the auto industry being down as well for the last year and a half. But at the end of the day, Mahindra Logistics, we really serve others. So our job is to move goods and people for others. We don't do it for ourselves in that sense, right? So we are in some ways a mirror of how the world and how our customers work. People like Piyush and others, Patu and others. And I think the way it's been a challenging environment, obviously, but if you break it into where we are today, I think cross-border supply chains are still challenged. Piyush mentioned, I think ports, airport terminals are still fairly inconsistent. So that part of your supply chain still struggles with predictability. Domestically, I think long-distance logistics and movement has started coming back. And I think you would see that in e-way bill data and so on, where I think highway movement of vehicles have started coming back. Reverse migration still remains a very big challenge, frankly, with drivers and so on. But I think it started coming back slowly, and every firm has a different approach. But I think we've been able to kind of bring it back. One thing I would say is supply chain is more than logistics. And one of the concerns I have from a recovery perspective is that I think in automobiles, the automotive sector and manufacturing as a whole, and I think Patu alluded to this in his comments earlier on, that you are just below the OEM, there are tier one vendors, and you got to go down multiple layers down, right? And it's at the lower ends of the chain where visibility is poor, capital liquidity are problems, reverse migration is a real challenge. So those are not just problems of transportation or warehousing, right? They're also supply chain problems in their own way. So I would just be cautious to define that. While I think we're seeing improvements in things like transportation, I think that the challenges broadly around building a robust and resilient supply chain, I think are still there. Now, what we've tried to do, obviously, is we worked through the lockdown. So we have 15,000 employees, 17,000 vehicles, all pretty much in an asset-light model. And we worked through the lockdown 1 to 4 because we was providing essential services. So we started planning, I think, probably in March or before the lockdown, a few weeks before that, right? And obviously, a lot of our fleets are tech-enabled. So we have control towers. We implemented work from home systems. So we were able to monitor fleets, monitor sites, and manage to, from an asset optimization perspective. So we were able to get through a lot of that. Obviously, a lot of work goes on managing your fleets actively because you are supplying often from one green zone to the other, but you go through one red zone, 2 yellow zones. And you think it's a green zone, but the guy on the ground doesn't think it's a green zone. Right? So he still stops your vehicle and says, aap nahi ja sakta. So it's just a lot of your tactical operations where you just actually have to manage fleets, I think, pretty much online. And it's been excruciating. I think many of our teams have actually worked just 7 days a week. Though I won't say 24 hours, but that's been kind of a stretch which you have to keep at least our control towers and our tech systems going through that period. I think as we look at the future, I think there are two big things. What I think customers are asking us for, I think one good thing, at least from our perspective, just happened is supply chains become a CXO conversation, right? And there's a lot more deliberation on that, and it's not like, it is a set of trucks and a set of godowns, right? I have all these kind of anecdotes around it, but it's really not like the Sholay or the Hindi movies of the 70s anymore, right? The godown has all the thugs sitting in it. Now we really have a lot of, I think, executive attention around building resilient supply chains. I think what customers really want from us, I think, is far more flexibility on cost to serve, a lot more agility in terms of speed, and I think very importantly, a great need for line of sight. I think there's an increasing awareness that your first layer of your supply chain is actually not all of your supply chain. Right. So where we see clearly a lot of opportunity is really that, one is fulfillment. Fulfillment in India will remain complex. So you're going to see more demand for warehousing, a larger move towards multimodal logistics, a lot more omni-channel systems, people mixing multiple channels, digital versus physical channels. I think that's going to be a big play. I think ensuring, especially for companies which have large cross-border supply chains, I think is really important. But the piece which we're really, I think, most excited about is the need to actually build far more the responsiveness of supply chain by managing data. So I think personally, we'll just see a big explosion in managing the information and data layer of your supply chain, building line of sight down to multiple levels of it, and really orchestrating your supply chain a lot more visibly. So I think that, I think that move's been happening slowly, but I think it'll be a big catalyst. And like many others, we've at least approached this saying that March 24th was like day zero, right? So we really not said, it doesn't matter what your revenue from auto was in March last year. It's March this year or June this year. So we're just building from scratch. Right, and we're going to resize the business and think about it, across multiple scenarios.
Right. So thanks, Ram. In fact, it's interesting that you said supply chain is a CXO conversation, and another thing that is a CXO conversation now, which a lot of us were hoping that at some point it will become a CXO conversation, is digital. Right? Everybody is talking digital. 3 years ago, if I were to do a panel discussion on digital with CEOs, I would probably not get anybody, right? They will just say, "Oh, you talk to my CIO, usko le jao. You can have the discussion." I don't want to have, but today everybody needs to know about digital, and whether it's the CEO or the board member, and it has become very much a board level and a CXO level conversation. So Shamalda and Arjun, are two sides of the coin, and where Shamalda is from PWC, which is using digital in a huge way, but its PWC also is a very legacy company with a lot of complex layers like we were talking, and whereas Upgrad is more a startup and you're born digital, right? So there is a difference. But Shamalda, I would like to ask you, in terms of technology, like digital technology, has your view of this changed because of the pandemic? You have already alluded to it in part in your first, when you in your earlier comments, but a little more detail into, do you think there is a change in mindset at the board level, senior management level, in terms of looking at technology and considering it?
Let me start at our end. And the fact is that for us, technology was a disruption always happening pre-COVID. And we've been on this journey for at least 3 years from now. We want to be one of the biggest user of cloud in many ways. We have our CRM system, we have a collaboration platform, and we have our employee engagement platform. They all work on cloud, including our working papers and other things for audit and other things that we do. It works on cloud. So for us, technology has been a medium in that sense of doing business, and we've clearly adopted this at least 3 to 4 years back. And that allowed us to move into the working from home seamlessly much before anyone could do it, because we had all planned. We didn't plan for an epidemic, but we had planned. The fact is that people should be allowed to work from anywhere. It was not planned that people should work from home, but the whole was from anywhere. So, and are able to access to your knowledge base and the database that's sitting on the cloud. So from that, the other thing that we started two years back is what we call is our acing digital initiative, is getting each and every person in the organization to go through the digital upskilling. You have to understand the new technology products coming into the market. You don't have to be an expert, but you need to understand the usage. You need to understand, and we have been spending huge amount of money in upskilling there. The whole idea is that if you understand technology, the advantages of technology and what it does, you are able to do two things. One, find a better solution at your workplace, do that, and we actually allow and promote people to innovate at their workplace, in that sense that how do you actually make your work processes better, help them with the innovation at the workplace. But it also helps you find solution for your clients. And that has held us in good state. What has happened now, and answering to your question, is you're right that when you were pre-COVID or anything, when you go to a boardroom, that the whole thing was around whether it is infrastructure is secure or not, everything is there. No one used and seen that. And now, obviously, there were companies who were progressive, like who could see the benefit of using technology in a manner that you will build business models around it. I think what has happened is it has forced people to use technology and see and build business models. Right. Rather than just using and talking about technology as a means of doing business. And I think this has really come to fore now. And that's a great, great plus. Companies like Arjun's and others, they've all harnessed this much before because they saw it as a different business model. So now the boardrooms would say that if I have to get my sales, if I have to understand customer behavior, there's a whole lot of discussion today in the boardroom, and we actually get involved, is to understand the change in customer behavior. And I can tell you the simple example. We were all used to going to get the service. Now we are all demanding to get the service to come to us in many ways. Right. So, and all that is possible because the technology allows you to actually do that, and good companies will continue. And there's a great discussion that's actually happening at boardrooms today. And every company in its own ways is looking at building business models around, and that's the conversation around it. Medium of doing business was always there in some manner, but around the revenue model, around your business models, that is really what is core to your business. That really gets the attention of the board.
Fantastic, and thank you. With that, I'll come to Arjun. And what do we need to ask you about technology? Because technology is you, right, in a way. But even though, but tell us about what you're doing. It's not only about online education and the fact that you're a digital native company, but how are you digitally transformed? Are you a fully digital company? Yep. You still had 6 offices that you had to close. And are there areas that you still have to improve in terms of going more digital?
Sure. So first of all, I will differ a little bit from what you mentioned, Alakesh, that digital has become a CXO or a boardroom conversation now. So I come from the startup world. Ever since my Tata days, probably 10 years ago, I've been always in the startup world. So that's one world where, as Tamalda was saying, business models are, built keeping technology as the core, along with the customer, of course, right? Okay. So I would say the investor community is one of those groups of people who identified it very early. And that's the reason why anybody who calls themselves a startup and says that I'm using technology to revolutionize a traditional business gets a lot of funding and investments and other things, right? You saw that continuously. So this has been happening for some time, but the fact of the matter is that the TAM available, although the TAM available was big, the addressable market has always been small, and it was money burned to widen that market, be it the discounts from e-commerce or the 999 rooms from Oyo or whatever it is. It has been always like that. The market was getting created. The big difference, or the big thing which COVID has done today, is that it has forced everyone to take technology seriously. You don't have a choice. I'm sure that, my parents are in a small town, North Kerala, Kannur. They do all their purchase in e-commerce, on e-commerce website now. Every shop in that area is doing door delivery today. So that's where it is. The large swaths of our market, which was not really addressable, suddenly has become addressable. So obviously there is a remarkable amount of interest. And if you ask me about us, or the systems which I have been close to, what has been happening is, see, when you're building businesses around these ideas, right, never ever is it 100% perfect. And if you want to keep running the business, you have to take that call that at times have to do offline also. I mean, if Make My Trip in 2000 has said that, no, I'll only be online, then it would have never grown like this, right? They said that I will go offline also if required. So that's how we have been all functioning. If required, we will do that because that's how it is. So we found that education as a product was not, it's a very high involvement product. It requires the trust. And trust in India was a lot about meeting, touch and feel, and things like that, which is the reason why predominantly our sales model was about going and meeting the customer, feet on street, face to face, field sales. And it was what which was growing any tech company in the country. With COVID, it's all out of the window. You don't have a choice.
Yeah.
So every one of them is sitting and doing a Zoom call with the customer. I don't see any change in the conversion. In fact, the conversion is going up. And the efficiency comes in, right? No traffic, no travel, any time in the day. Customers are also sitting at home, working. They also want a break. They are okay with giving you an appointment on a weekday as against the weekend we could have saw them. So, I mean, this is the era which was initially, visualized when you were building such companies, and COVID has forced us to do that. So I would say that the whole digital transformation has been accelerated by COVID more than any CIO could have done today. And we are all trying to work ourselves around it. Some people have already foreseen it and had more processes. Others are getting there. So in my mind, what I'm trying to do is, see, I always try to keep customer at the center of it. What the customer needs, we need to deliver. And now the customer seems to be out of choices. So he is trying to do things the way we have envisaged. Let us see where it goes. But I totally am aligned with what Chamalda and Patu was saying. Finally, we are social creatures. We may change, but then we have to be ready for it. By then, the whole thing is that in this window we have got, if we establish our product as a viable option along with all the conventional thing, then we have won the game. So that's how we are seeing it today. And an ideal example will be what Alibaba did with online shopping in China after the SARS pandemic is what we would like to do. Not what Paytm tried to do during the demonetization. It is not sustainable, right?
Okay, I hope I can quote you on those names.
Don't please don't do that. Yeah.
Okay, fantastic. We are past 5:30. So what we'll do is I still have several questions, but unfortunately I cannot ask them anymore. But we'll quickly ask a couple of questions that have come in from the audience. And, some are very good questions. So unfortunately, there are quite a few questions. I can't take them all. But one of the questions is, what's it gone? Yeah, okay, this person has not named himself. It's like anonymous attendee. Does it seem logical to aim for pre-COVID standards, or should we set new standards for ourselves? Like our measures of success, is the economic success metric going to change after COVID? It's open to anybody who wants to answer. Piyush.
I will take a crack, Alex.
Sure.
I think the economic matrices may not change from a measurement point of view. In the short run, I think what Patu was saying is critical, that eventually you'll have to have enough liquidity to make sure that you survive that. So some of the economic matrices will take priority today beyond anything else. And that's for the period that we're talking about as recovery phase. But eventually, long-term value creation of any business will remain core of our economic matrices, and that I'm not seeing as changing. How we create value for all stakeholders, the employees, and our entire value chain that participates in it, and eventually the shareholders. I think that's the core of economic matrices that will continue to do that. But what's going to be important, and something which Shamalda and Patman and everybody talked about a little bit, is how eventually our own ecosystems are evolving, and which is obviously at the core of it is how people who are involved in the business are evolving. is going to be almost alongside the economic matrices. So our people matrices, our human capital indexes are going to be almost as important as our economic matrices as we come out of this and as we are going through this also. So that's how I would look at it, rather than say that fundamentally the way we think that economics will change.
Okay. Navalda.
No, I think I agree with what Piyush was saying. I think one is you have to be core. I mean, one of the things that we should always not get this into it, because it's a different world, different environment. We move away from our core competency. I think that's where businesses fail and find it difficult. You have to be core to your competency, but that does not mean that you would not change to improve your core or actually develop. I think if I was running a business, which I would clearly want to see, one is your economic indices and parameters around the core and what you're actually doing around the repair and the reaching. But I would also give equal or more weightage when you look at a team or anyone who's looking at reconfiguring the business. I think, that is where all leaders of the businesses would need to rethink that. How do I allocate resources, not just on the first two parts, but also on the third part, the reconfigure, because we will lose a trick if we do not focus on the third part. And it is not going to be business as usual that pre-COVID we go back, and because the world has changed, the biggest change is your stakeholders' expectations have changed. You cannot unwind that expectation at the end of the day. If your stakeholders' expectation, whether it's your customer, whether it's your society, whether it's your government, whether it's your customer, whether it's your people, their expectations have changed. And that's something that we should. They would expect something different. And that's where you would put also equal weightage or more on people and team. You don't have to get whole of your, and that's other risk that do I get whole of my organization thinking about what should be, that's another risk that you run. Right. You have to get your basics right, your core competency working, but also have equal amount of investment or slightly more about the new world that's coming up.
Okay, slightly simpler question, but this is straight for Ram. And the question is, in an industry like logistics, supply chain, transportation, how can work from home be successful? Not a very strategic question, but it's still interesting. So I thought I'd just bring it up.
It's interesting. So I think so we have all our, we implemented work from home in early March. Work from home from an early March. So all our sites, we have 500 operating sites. I think many of those sites obviously have operating personnel, which are on site. I think we've leaned around 20% of them who are non-essential back to a work from home model. But roughly 80% of them still are actually on site. But a lot of our back offices, our sales teams, our corporate office, so those all have essentially transitioned to work from home, starting early March. And I agree with Patu, by the way, that I think a lot of our employees would like offices to reopen, because work is such a big part of our lives, So they would definitely want that, myself included, actually. But that said, we have been able to successfully do it, and we've learned. Going into it, we learned from people like Shamal's company. In fact, PWC helped us launch SAP, go live on SAP in the middle of the lockdown. Wow. Across our entire company. So we learned from several other people and kind of adapted ourselves. So
fantastic. There are many more questions, but I think we've run out of time. And I would now invite Sanjay. Sanjay is already here. Sanjay Tolia of PWC India. Please give us a summary of the discussion and deliver the vote of thanks. In fact, before you start, to your point, Ram, I'm in office today after almost 5 months. And it feels great.
Thank you for saying that, Alokesh.
Working from home all through, but coming to office is, even though it's half empty, But
so Alokesh, my wife tells me that everything is opened up. Then why are you not going to office?
Yeah, by the way, that is true. I think
tired of you.
I think there's a bit of soft pressure from my wife as well, saying that probably
I was able to relate.
There's too much of me around the house.
Too much of you. Yes.
My
So I was
wife
able to
didn't
relate to
protest
you.
at all when I said I have to go to office. She said, yeah, okay, go.
Fantastic.
I don't know how Arjun and others feel, but my wife did compute out that she's seen more of me in the last 4 months than probably the decade and a half of our marriage.
No, Ram, actually, the other thing we make a mistake is that we tend to give advice at home. and that's the other challenge.
Right.
Yeah.
Every place has its own ways of doing things.
Thank you, panel. Very, very interesting. Very interesting conversation. So 3 takeaways for me, and I'll just talk about that. So one is, I think despite pandemic, all of you sounded very optimistic. And I think this optimism is something which will take us forward, because even if I hear Pattu talk about that his industry will take 3 years, but look at the optimism Pattu has in terms of how am I going to manage liquidity? How am I going to manage my 70% of fixed costs? So hats off to all of you, and thanks for that optimism. The second one is clearly there has been a huge amount of learning curve, and I think all of us moved very, very quickly on the learning curve. We all spoke about it. And I think the most important learning was that how to deal with resilience. Now, whether it is to get more of digital into the business, whether it is bringing new innovation to our products and services, whether it's all about new partnerships and alliances. But at the end of the day, I think there have been enough learnings, and I think people want to apply that even when the pandemic goes. And the third one, we spoke about that the trust factor has come back into the society. Maybe while working virtually, everyone has increased that trust, whether it's employee, whether it's vendors, whether it's others, but I think this trust has come back. So if I look at these 3 things, optimism, learning for dealing with resilience, and having trust back in the society, clearly shows that whenever we come back and while we are in this journey, while the pandemic is still around with us, we will continue to be successful. And you saw that 82% of the 225 CXOs voted for recovery pre-COVID period revenues by June 21, which is quite good. So I think this is great. It reminds me of the Amir Khan movie, The 3 Idiots, where he said that we just have to say all is well, and it actually works well. So I would want to say all is well. With that, thank you, panelists, thank you, audience, and thank you, Economic Times, for this platform. It's been a great partnership, and I wish everyone stay safe and have a great evening. Thank you very much.
Thank you, Sanjay. Thank you to all the panelists. Thank you to everybody who joined us. Special thanks to PWC for giving us this opportunity of this platform. Thank you all very, very much. As Sanjay said, we all look forward to a better environment. Challenges are there. We cannot wish them away, but we have to tackle them the best we can and keep looking forward in a positive manner. And finally, as I said in the beginning, stay safe and stay home. Thank you all very, very much.
Thank you all.
Goodbye.
Thank you very much.
Thank you very much.
And thank you very much. Thank you.
Thank you.
Thank you.